p.m. in the afternoon here. I mean, in the evening here. And so hopefully we don't get cut off. And I don't perceive that we will because I haven't had issues all day, but just putting that out there. Okay, finally. So this says John and Shannon O'Banion, who live in Mesa, Colorado, filed as married, filing jointly. And we have John's W-2 information. Shannon did not work, but she received unemployment. She also has a medical condition, which means they have plenty of medical expenses to write off. But she received unemployment compensation. She also had federal withholding taken from that compensation. And in addition to that income, they also had expenses as far as state income taxes, real estate, car loan interest, personal property taxes, cash charitable contributions, and mortgage interest, union dues, and tax preparation fees. Now, it does not say that they want to contribute to the presidential campaign, so we're going to assume that they do not. So we're going to get started, of course, like we always do with the preliminary information. So very first spouse to list is John. And the last name is O'Banion. You can just start typing the O and it should come up there. O'Banion. And the social that they have given us for him is 412-345670. His spouse is Shannon. Same last name, O'Banion. Social 412-34-5671. Now they do not have any dependents, so we don't have to worry about that. Home address is 3222 Pinon Drive. This is Mesa, Colorado 81643. And we don't need to check anything as far as the presidential election campaign because it did not mention that they needed to, that they wanted to contribute. We're going to select their filing status as married, filing jointly. Where it says digital assets here, we're going to select no because we didn't have such information for these taxpayers, and they don't have a dependent. So once you enter that preliminary information, let me know, and then we're going to move down to the income portion. All right, we're going to move forward. So now in the income section, remember only one spouse had income. And so for John, his W-2 income, we're going to put in box 1A here, which they told us it was 66,347 on line 1A. Now, once you have that on line 1A, we're going to come down to line 8. And the reason we specifically are coming down to line 8 after that is because line 8 deals with Schedule 1 additional income. Remember, this couple, one spouse did not work, but they received unemployment compensation. So once you have this, we're going to go to tab Schedule 1. Okay. And let me know once you've gotten there. Welcome in, Gloria. You're not technically late. We just got started. We haven't even gotten far. So once you get to Schedule 1, this is really simple. The one spouse that had the unemployment compensation, we're going to come down to line 7 and enter that unemployment compensation. So on line 7, you're going to enter 5,283. This is Schedule 1 for those who are just now getting to this form. This is Schedule 1. And on line 7, you're going to put the unemployment compensation of 5,283. Now, once you've confirmed that you have this is all we need to do on this particular tab. So please confirm that in the chat. All right. So now that you have that, instead of us going back to the 1040, we're going to go ahead and knock out this Schedule A because that would have been the next thing to do anyway. So you're going to go to Schedule A. This is where we're going to put all of those itemized deductions that they gave us, such as her medical expenses, the real estate taxes, the mortgage interest, etc. Right? So the very first thing at the top is medical and dental expenses. I am going to add them all up. And you're always free to double check if that's what you would like to do. But we have Shannon's prescribed diabetes medication. That was 4,250 plus hospital charges of 9,350 plus regular physician visits of 835 plus the eye doctor 75 plus blood testing supplies, diabetes blood testing supplies 755 plus not plus minus insurance reimbursements of 1,925. So what we did here, just for recap, is that we added all of the medical expenses they gave us and we subtract out the reimbursements that the taxpayer received from their insurance company for medical expenses. That brings us to 13,340 to place on line 1 on the Schedule A. All right. Line 2 says enter the amount from form 1040. Line 11, which is basically the total income, is basically the W-2 income plus the unemployment income. So 71,000 $630 is what you want to enter there. And line 3 says to multiply line 2 by 7.5%. Yes, we're in unit 3 perform. So we're going to multiply $71,630 times 7.5%, which gives us 5,372. Now, once you have this, please confirm you have this before we go down to the next section. All right, so now we're going to go down to the next section. And for box 5A, that's state and local income taxes or general sales taxes. You may include either income taxes or general sales taxes, but not both. So if you elect to include general sales taxes instead of income taxes, check this box. We are going to leave that box unchecked because they gave us state taxes, which were $4,950. 5B says state and local real estate taxes. They paid $4,170. 5C says state and local. Okay, I'm sorry. You may have to log out and log back in if it's not allowing you to input anything. State and local personal property taxes, they have $765 for that. And line 5D is automatically added for you. We're on the Schedule A tab. 5E says enter the smaller of line 5D or 10,000. And so we're going to obviously pull down 5D, which is 9,885. Okay. Now, once you have this, let me know and we'll go down to the next portion. All right. Yeah, we're on the Schedule A. And so now we're going to go down to line 8A here, dealing with the home mortgage interest, which what they gave us was 9,970. All right. Line 8B, we're just simply bringing down, I'm sorry, not 8B, 8E. It automatically brings down that same number, or is adding the sales that are before it. Line 11 says gifts by check or cash or check. This is dealing with the charity. And they donated 2,135. So we're going to place that on line 11. And once you have this, please let me know. And then we're going to go down to finish this form. We haven't completed a Schedule C. Schedule 1, we already did that. We're finishing up Schedule A now. Five D. 5D, you should have entered 9,885. Well, actually, you don't enter anything in 5D. As long as your 5A, 5B, and 5C are entered correctly, 5D is going to be calculated itself. We haven't finished the 1040 page 1. We're going to go back to it once we complete the Schedule A. All right, so to complete the rest of this, there's nothing else to do. It automatically calculates line 17. So you should have 29,958. Once you confirm that that is what you have, go back to the 1040 page 1. Where we left off on the 1040 page 1 is line 8. So we're going to go back to the 1040 page 1, line 8 is where we stopped. And line 8 deals with the Schedule 1, and the amount that you want to put on line 8 is 5,283. Now, once you have that, you're going to go down to line 12. Line 12 is dealing with standard deduction or itemized. Remember that amount we just showed, line 17 of what page, what tab, what form? Are you talking about Schedule A? Schedule A, line 7, that means you missed several numbers here at the top. So everyone who is doing this along with me, please look at the screen and look at the numbers that I have right now in boxes 1, 2, 3, and 4. You should have those same exact numbers. Everyone, please confirm this is what you have on Schedule A. Lines 1, 2, 3, and 4. All right. Please confirm that you have the same amounts on line 5A, 5B, and 5C. If you have the same amounts on line 5A, 5B, and 5C, then that means 5D and E is going to take care of itself. So again, please confirm that you have the same amounts that I have on 5A, 5B, and 5C. All right. Now, make sure and please confirm that you have the same amounts that I have on line 8A. If you have the same amount on 8A and line 11, please confirm 8A and line 11. Okay, what about line 14 and line 17? I need everyone to confirm that you have the same amounts for line 14 and line 17. Okay, if you do not have the same amount on line 17, what line are you missing right now? Okay, what about now? Line 4 is not a number you should be entering in as long as you have what you need on line 1, line 2, and line 3. Line 4 is supposed to calculate itself. Can you confirm that you have that correct? Okay. So we're going to go back now to the 1040 page 1. Line 12 is where we left off, and we're dealing with the standard deduction or itemized. Standard deduction for married filing jointly is 27,700. But for their itemized deductions, it came in at 29,958. So we always go with the higher number. So we are going to enter 29,958 on line 12. Lastly, on this page, line 15, subtract line 14 from line 11. So 71,630 minus 29,958 gives us 41,672. So can everyone confirm that you have these same numbers before we go to the second page of 1040? Okay, you'll probably have to just go back and watch the video for that top portion because it's the preliminary information. Just for the sake of time, it's already 42 minutes in, and we literally have to finish this, and we have a whole nother problem to complete. All right, so the tax, I'm going to pull up the table. You don't have to if you don't want to, but we're going to see if it aligns with what Connect claims is the tax. The amount for line 15, $41,672. All right, so for the tax, we're going to go down to the 41,000 range. Give or take, that is here. And 41,672 is more than 41,650, but less than 41,700. And it says that tax for married filing jointly is 4,561. And so that aligns. We're going to use that as the tax on line 16. So line 16, you should be entering 4,561. Line 22, subtract line 21 from 18. We're simply going to bring down the 4,561. Now, once you have this, please confirm you have this before I move down to the payment section. All right, so down in the payment section for 25A, this is the federal tax that was withheld from the working spouse, which was 4,787. Also for the unemployment tax that Shannon had collected out of her unemployment compensation, we're going to place that on line 25B is 646. So please confirm you have these amounts before we finish this form. All right, so now lastly, just line 34 and 35. Of course, we have to subtract line 24 from 33. Line 24 is 4,561. So 5,433 minus 4,561 gives us 872. That is due to the taxpayer. You're going to put that same amount on line 35A. Please let me know once you have this, and then I'm going to hit check my work on my end. You don't have to do it on yours. The bottom of the 1040, what part? What line? The bottom of 1040, page 1. All right, so now we're gonna go to the, well, let me hit check my work and see if there's anything that I need to fix really quickly. All right, so I'm good to go there. I'm gonna go to the next problem. Now, the next problem deals with the Schedule C. Here is where we can't keep going back and forth. It's a lot because we're calculating depreciation, et cetera. And I am going to post a few announcements just explaining some things about depreciation and how you derive at car and truck expenses after this is over. However, this says Kathy, it gives us her social. She has a home cleaning business. She runs a sole proprietorship, and they give us her gross receipts. Also, they give us her mileage. She has a van that she placed in service in that same year and the cost. We also have all of her business expenses. And we also have a list of her business assets that were purchased, not all in 2023, some were prior to. And so it says for us to determine Cassie's self-employment income and QBI deduction. So when I post those announcements, you're going to have 3 separate announcements, one talking about depreciation and calculating depreciation using the macro system, another announcement that is dealing with placing assets in service, and then another announcement about calculating qualified business income. And the only reason why we're doing 3 examples of that, or 3 different announcements with examples of this, is because you may potentially see it on another assignment. I don't know. I just want to be, it's better safe than sorry. So for the Schedule C, the first thing we need to do is put in the preliminary information that we have. Name of proprietor. All you have to put is Cassie, or you could select Cassie from the drop down. The social that they give us is 412-34-5670. And principal business and or profession, you want to select home cleaning for that. We do not have a business name nor a business address. Okay, we don't even have a employer identification number because it's a sole proprietorship, so she probably uses her social security number as the EIN. The accounting method is going to be cash. All right. And letter G says, did you materially participate in the operation of this business during 2023? We're going to check the box yes. Letter H says, if you started or acquired this business during 2023, check here. We do not need to check that box. This business was started prior to 2023. Line I says, did you make any payments in 2023 that will require you to file Form 1099 or some 1099s? We're going to select the option no. And the last question, if yes, we selected no on the previous question, so we can skip line J. Now, once you have this preliminary information, please let me know in the chat box, and then we're going to go down to the income portion. All right. So now we're going to go down to the income, the gross income receipts that they gave us for this taxpayer that you should place on line 1 is $203,000. Now notice they say here that if this income was reported to you on a form W-2 and the statutory employee box on that form was checked, we don't need to check anything because that was not how these gross receipts were reported to us. Once you have the 203,000 that you place on line 1, carefully, please follow me as I enter these expenses that we do have. All right. Firstly, you want to put on line 13, not line 13, I'm sorry, line 15. For insurance, they paid $2,800. Line 20B for their I believe it was rental expenses. So yes, they had rent of $2,400. So you want to place that on line 20B. They also had wages. Line 22, let's start with supplies. We'll keep going in order. So supplies, 12,500. Taxes and licenses, 1,950 for line 23. Line 26, we want to enter the wages of 26,000. All right. And then there are some other expenses that we want to add up, and I'm going to tell you what they are. Please confirm you have this so far before I move further. All right, so now I want you to go all the way down to the bottom of this form, to the last part there. And I'm going to tell you why. This is part 5. For other expenses that we're going to put a total amount for, the things you need to list here are the cell phone. They also had postage. And they also had the internet. These were all things that, and make sure you select internet and not So for the cell phone, the amount was 1,250. For the postage, the amount was 500. For the internet, the amount was 600. So these are the things that you need to list. Cell phone in part 5, cell phone, postage, and internet in their respective amounts. Please confirm you have that before we go back up to the top half. All right, so now that you have this, we're going to go back up to the top, and the line that we left off on was 27A, which is other expenses. This is where you put the total of those expenses we just listed out, which was 2,350 on line 27A. Now, we're not necessarily complete with this particular portion because we have to go and calculate some other things first. However, please confirm that you have all of these amounts so far. All right. Now, the lines that we also need are line 9 and line 13, but we have to actually go and complete the tabs for 4562, form 4562 that deals with depreciation. I'm going to try my best to break this down, even though it is going to also go in an announcement, just so you understand how we got here. So I'm going to go now to form 4562, page 1. 4562, page 1 is where you want to be. This is dealing with depreciation and amortization. And if you notice, this taxpayer had quite the amount of assets and quite the amount of expenses in terms of the van, etc. Now, the very first thing that we typically aim to do with this particular form, and keep in mind, if you're in this chat and you have to leave, you don't have to let me know. I understand. You can go back and watch the recording, but I have to complete this problem. All right. It must be done. So for this form, and it's really on line 1 is where we are starting. With line 1, it's talking about the maximum amount, and it's the election to expense certain property under section 179. All right, section 179 deduction. Usually you can elect to expense the full amount of a qualifying, asset within the year that it's actually placed in service. And there is a limit on it in terms of the limitation of gross receipts that you can have in order to maximize that deduction. So where it says line 1, maximum amount, what they're referring to is the maximum amount back in 2023 that was elected to be expensed, that you could elect to expense. And so the amount is 1,160,000. All right, that's the amount you should place on line 1, 1,160,000. Now, the next line after that is talking about the total cost of the asset that was placed in service. Okay. And in order for us to find out what was placed in service, is we have to literally find out what was the business use of a particular asset. The way that you find the business use of an asset is that you take the cost of that asset, you multiply it by the percentage in which it was used, and that way you can get your 179 deduction. Now, how do we determine necessarily what was the percentage that was being used for that said year, right? If you look in the problem and the information that they gave you, they told us in this problem, and I'm just going to go up so we can all see it. They told us in this problem that there was 27,000 of business miles that were used, right? And 35,000 miles driven for the entire year. And usually if you're trying to find out what the business use percentage is, you take the number of business miles, which in our case was 27,000, and you divide it by the total miles that were driven for the year. And so in our case, it was 35,000. So 27,000 divided by 35,000 gives us 77.1428%, or more or less 77.143%. All right. So with that 77.143%, we know that that is our business use percentage. And so if that is our business use percentage, how much do we actually deduct for the 179 deduction? It told us that our total van expenses were 4,500, right? And if our total van expenses were 4,500, let's take that 4,500 and let's multiply that by 77.143% and see what we get. We should get $3,471.44 if you round it to the nearest cent. All right. And so now we need to determine our section 179. So this line 2 is actually going to connect to a different line. So line 6, she had 2 computers. That's what I want you to put there. 2 computers for the description of the property. All right. This is what the assets that she can elect under 179, but 2 computers. The cost was 4,900. All right. Under both business use and elected costs. And line 7 says, enter the amount from line 29. What they're referring to is going to be the amount on line 29 of this form that we are completing. So you do not know what that amount is just yet, because we're going to go and I'm going to show you how to calculate it. So please confirm you have this so far before I go to page 2. All right, so we're going to go now to form 4562, page 2. And the very first question at the top, do you have evidence to support the business and or investment use claim? We're going to select yes. All right. And 24B says that if yes, Is the evidence written? We're also going to select yes for that. We don't need to put anything on line 25. There's no special depreciation here. But on line 26, property used more than 50%. What did they use more than 50%? Well, we already manually calculated it. It was the van. So we're going to click that drop down and select van. And the date that it was put in service was 1/1/23. All right. And the percentage of use that we said took place here was the 77.143%. Now the cost of this van was $27,000. All right. And so here is where we have to manually calculate what the basis for depreciation needs to be. So you take your 27,000 and you multiply that by 77.143%. That gives us 20,829 to put in column E there. That same amount should be placed on the very end of row 26. All right, please confirm you have this so far. All right, now that you have that, we're going to go down a little bit. We're going to make sure that everything else, we have what we need, and it shouldn't be anything else on that form for you to complete there. I do not think that it is. So once you've confirmed that you have that, we're going to go back to page 1. So going back to page 1, we now can put on line 7 our 20,829. Okay, we just figured that out. Our 20,829. Notice also what was calculated was line 8, which talks about the total elected cost of 179, cost of section 179 property. And line 9 also talks about the tentative deduction, enter the smaller of line 5 or 8. So we're going to take this 25,729 and we're also going to place that same exact number on line 2. 25,729. Now, back in 2023, the threshold for section 179 property before reduction in limitation, which is also in your book, was 2,890,000. All right. So at this point, line 11 says business income limitation. So the business income limitation in 2023, which is also in your textbook, was 149,100. So that's what you're going to place on line 11. So at this point, you should be able to confirm that everything that you see on my screen, you also have it on yours as well before I move down to the next area. Okay. Now, if we go down just a little bit, and we'll be able to complete this form. If you go down to line 17, it says mattress deduction for assets that were placed in service in tax years beginning before 2023. Now, if we go back to the problem information, the assets that were placed in service before 2023 were the printer. It was a printer, a copier, and furniture. And if you know anything about the macros system, each one of these types of assets have a certain useful life, and you can only calculate a certain percentage for each of them. Okay, so I'm going to pull up the table that they gave us to calculate depreciation for these assets. And notice it's a half-year convention. And at this point, technically, because those assets were purchased in 2022 and we're now in 2023, we should be on recovery year 2. Okay, no matter the asset. Now, something else that is important, and all of this will be in the announcements that I'm going to send out. When it comes to calculating any depreciation, you have to know the number of years that qualify for each type of asset. We're not talking about a vehicle at this point. We have a printer, a copier, and furniture, right? So if we are talking about a printer and a copier, those assets are more or less the same, right? They're typically the same. And so they have what under the IRS system, a 5-year property life. And so since they have a 5-year property life, this is the area we will be concerned about. 5 years, we're on year 2, which is 32%. So in saying that, if the printer, which was 900, I'm going to add that to the copier cost, which was 2,100, right? 3,000. And let's multiply that by the 32%. That is 960. All right, that's one portion of the amount that we need. The furniture typically has a 7-year recovery period. The same thing goes for like office desks, chairs, filing cabinets, shelves. All of that has a 7-year recovery period. So we're going to be looking in this particular column, recovery year 2, percentage is 24.49. Now, if we go back to the problem information, the furniture was 6,000. And if we multiply that by recovery year 2 under 7-year convention, 24.49%, we get $1,469.40. So adding that $1,469.40 from the furniture plus the depreciation from the copier and the printer of 960, we get a total of $2,429.40. Of course, we have to round it to the nearest whole dollar. So where you put that amount is on your 4562, page 1, line 17. 2,429. And this is the reason why I'm putting it in an announcement, because I can say this 50 times, but honestly, until you see it with your eyes, it may not make a lick of sense. Okay, so don't worry about whether or not you got it now. It'll be in an announcement so that you can get it later, hopefully. Now, once you have this amount on line 17, you do not need to check that box or anything. Let's go down and confirm the amount that we have on line 22. Your amount should match the same amount that I have here on 22. Please confirm in the chat. Okay, great. So now we're going to go back to, have a good night. Thank you. We're going to go back to the Schedule C here. And we're going to go back to our Part 2 section of our cost here. And line 9, remember where we calculated our car and truck expenses from our mileage. It came out to 3,471. So that's what you want to place on line 9. Line 13, for the depreciation in the section 179, that last number we just determined, which was 28,158, you want to place that on line 13. So please confirm you have every amount from line 8 all the way to 27A. And if you have the same amounts, tell me where you were lost. If you have the same amounts, then just let me know in the chat. We're on the Schedule C. All right. So now confirm that you have the good night, have the same amounts on line 28 here and 29. And if you do, now we can go to the Schedule SE. All right, so now let's go to the Schedule SE. Okay, SE. On this schedule, this is dealing with self-employment tax because she is a sole proprietor, so she has to pay, the regular tax plus self-employment, half of self-employment. And nothing concerns this taxpayer until you get down to line 2, which deals with the net profit or loss from the Schedule C, line 31. If you look on your Schedule C, line 31, you should have 123,371. That's what you're going to enter on line 2. Line 4A says if line 3 is more than 0, multiply line 3 by 92.35%. So we're going to take 123,371 and multiply that by 92.35%, which gives us 113,933. Line 4B does not apply to this taxpayer. Line 4C says to combine lines 4A and 4B, we're simply going to bring down our 113,933. Okay. Line 5A is not applicable here. Line 5B is not applicable. Line 6 says to add lines 4C and 5B. Of course, we're going to bring down our 113,933. So before I go down any further, please confirm this is what you have so far. All right, so now we're going to go down to the bottom half of this form, specifically line 9, where it says subtract line 8D from line 7. Of course, we're just going to bring down 160,200. Line 10 says to multiply the smaller of line 6 or line 9 by 12.4%. So we're going to take line 6 of 113,933. We're going to multiply that by 12.4%, which comes out to 127,000. I'm sorry, 127.69. We're going to round it to the nearest dollar. So 14,128. Line 11 says to multiply line 6 by 2.9%. So we're going to take 113,933 and we're going to multiply that by 2.9%, which gives us $3,304 if we round that to the nearest dollar. So please confirm that this is what you have on the bottom half of this form before I go to the very last thing before we complete this problem. All right, thank you for confirming that. The very last thing is the QBI tab. And I'm going to give you this amount, but I'm going to make an announcement and break it down for you of how we got to this. All right. So the amount you want to put on this QBI tab is 20,161. Please confirm you have that, and then I'm going to hit check my work. All right, so I am going to hit check my work now and see if there's anything that needs to be reviewed on my end. And we're good to go. So if you have an issue where yours says incomplete for whatever reason, we do like we always do. You message me, I will look at it and tell you exactly what to fix, regardless of if it is problem 1 or problem 2. All right, because we are well over time. Look for those announcements within the next hour. Also, should you have any questions, then please feel free to reach out to me. Thank you to those who were able to kind of stick around and walk through the rest of the process with me. I hope you have a great rest of your day or evening, great rest of your week, and have a good weekend. And I'll see you back here next week. Thank you.